Hey, it's Michael Saul, but everybody calls me Tiny. And this video was last week's NASDAQ action, a shot across the bow for the rest of the market. Stock market analysis for the week of July 3rd, 2017. So it's a short week this week, only 3.5 days. Monday is an early close at 1 o'clock. Tuesday is Independence Day here in the States. And it is amazing because they can't close the market for 2 days in a row, unless, of course, incredibly extenuating circumstances like we saw on 9/11. But otherwise, it would have been a nice 4-day weekend, and Friday was pretty quiet as well. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com, put in your first name and your best email address, and then hit the Sign Me Up button. Then go to the email you used to sign up. Make sure you watch for an email from me. You have to click on the link that's in that email to confirm that you actually want emails from me. If you don't click that link, you're not going to be receiving any emails from me. There's for some reason, a lot of bots going around the internet filling in these forms. I have no idea who writes these things. Who sits around and writes programs to fill in opt-in forms? It just doesn't make any sense. All right, let's take a look at the market. The S&P 500 inside day on Friday. Thursday dipped below the 50-day moving average, but did close back above it. And if you look at the pattern here, it looks like yet another bull flag. Thursday came down to the top of this multi-month range here and did pivot off of it. But now we want to see, do we get confirmation of the bull flag, and do we get a break out and move higher? Here's the Dow. Looks a little bit better than the S&P, but still similar pattern. The Russell, still sloppy, slightly lower high here, but it is a lower high, slight or not. So that's something to watch, but got to wait for that confirmation, which would be a break below this low. Overall, though, it's still in this rising channel, and it's been pretty overlapping and sloppy. Mid-caps performing a little bit worse than the small caps, but again, nothing as far as a sell signal goes on any of these markets. And then, of course, here's the NASDAQ. Now, the NASDAQ was the big news this week because of the volatile day on Tuesday to the downside. Actually, Monday gapped up, sold off, then Tuesday was the down day. Wednesday got it all back, basically. I mean, a little bit, not quite, but close enough. And then Thursday, boom, right back down again. But like we saw with the S&P, it did get a bounce off of the lows. And then Friday was an inside day. So 3 closes below the 50-day moving average last week, and they were the first 3 of this year. Haven't closed below the 50-day moving average since December of 2016, and it was only for a couple of days. Now, this may wind up being the same thing, only for a couple of days. Look how strong the 50-day is. Of course, when you get hit with selling on such a strongly uptrending moving average, it's going to rip through it a lot quicker than it would if it was flat or obviously moving lower. But the fact that we have such a nice sharp angle here on the moving averages, that's one way to identify trend direction. Okay, the other way is higher highs and higher lows. Actually, that's not the only other way, but there are a bunch of other ways as well. It's just too long to go over all of them here in this video. But as of right now, even though the NASDAQ didn't have a great week, there's still no real damage. Yes, below the 50-day moving average, okay. I think it's going lower. I think it's going to at least the lows for May, okay, down here at 135.87. And I do think that it could go back to those April highs up here at 133.48, call it 133.50 just to round it up. And that's a first start. If this is real, okay, and if this was a shot across the bow, as they like to say, and the warning sign, the heads up, then yeah, look for this to come down all the way down to that 200-day moving average. My opinion, I mean, I've been making it known the past several weeks here on the videos. I believe we are due for a summer pullback. I thought we were going to get a sell in May and go away event. It's now July. So, yeah, I was quote-unquote wrong, but as I said every week, and I'm not trying to make excuses, if you can go watch the videos for yourself, still don't have a sell signal, and all that is just a seasonal background, right? You have to have the actual trigger on the indices. Right now, we still don't have that here. A couple of closes below the 50-day moving average. What I want to see here is a coil, some sort of consolidation that then breaks and continues lower. However, I still think we can get a summer pullback / even a correction. Dun, dun, dun. Do I think it's a new bear market? No, don't have enough evidence to call it that, but I do believe that we can get a pullback here. So what do you do if you're long? Same thing I've been saying over the past several months. Continue to trail your stops. Nothing goes forever. Trees do not grow to the sky. Make sure you are trailing stops. It's a lot different than being bearish. Even my statement that I think that we could get a pullback and a correction here. So what? Okay, I'm saying load up on puts. Just get out of everything. I'm not saying any of that. Waiting for a trigger. All right, somebody wrote me this week, and it was a great email, and they said, you know, it's just an educated guess. And yes, absolutely, it is an educated guess. The most important part of trading is money management. I unfortunately learned that the hard way. Okay? Yes, being right is important, sure. But when you're wrong, which you're going to be a lot, if you do this for any amount of time, you are going to be wrong a whole lot. Okay? The key is that when you are wrong, you want to get out as quickly as possible. You want to manage your trades so that you are taking a risk that okay, I lost on this trade, but I can make it back in the next trade. Or if I have a multiple on the next trade, then I'll make it back plus more. Okay, but please, if you're going to believe all the hype, 89.9% accuracy, I never lose, I turn $500 into $160,000. Come on, enough. And I know if you're watching these videos, I know you're smarter than that. So, but just a reminder, because even I sometimes want to press, want to sign up to some of these hype machines to see if it's real, but it's not. Okay, time and time again, people have been coming to me now I've been doing this since 99. So what is that? 18 years, whatever it is. It's coming up on my 18th year anniversary. Just teaching it. I've been trading it since trading the market since the early 90s. But anyway, I've had hundreds, probably thousands of people over the years come to me and said, "How can they say this? Is this true?" And it's not. Okay, it's not. Losing is a big part of this profession. I don't want to be Debbie Downer or anything like that, but come on, you have to be realistic here. So take losses when they happen. Try to let your winners ride as long as you can. But again, it's another just, let your winners run and cut your losers short. Okay, I mean, that is the secret to wealth when you talk to people like Buffett and Paul Tudor Jones and Peter Lynch and all these Templeton, all these great investors and traders. But don't just paint that with a broad brush. Okay, yeah, let your winners run, but still manage them. Trail your freaking stops. All right, let's go through the indexes real quick. Here's the semiconductors. If I put the right symbol in, yes, the semiconductors here look more of like an ABC here. If I could talk, that would be great too. Hang on one second. I'm trying to find. I'll be right back. All right, here we go. So I want to get a measured move here. So I'm too lazy to do it with a calculator. And then I create a parallel line, and then I take that parallel line and I go like this. So, and a C equaling the A would bring it down to about 1,000, which is, again, back to home here. This was a nice consolidation. Let's look at some of the stocks. Clad Tanker headed for that 200-day moving average. We've been talking about that one after it failed up at 110. NVIDIA does look like it has the lower high, but watch that 50-day moving average coming in. Yeah, Intel not looking so great. New lows on the year. And looks like wants to head down to this high down here, 3305 area. How about like the ADI? It looks like the 200-day moving average. MU. Yeah, so MU popped out, touched the high, and then nasty day on Friday. Watch that 50-day moving average. How about the banks? Okay, so the banks are still acting okay. Matter of fact, after they pulled back and tested the 50-day moving average, they had a pretty nice week. Bank of America, J.P. Morgan, Citigroup, talked about Citigroup outperforming, and there it goes, up there at the highs. Bank of New York, another one outperforming. Northern Trust, another one outperforming. Here's Zions. Here's Goldman Sachs. Yeah, I mean, got back above the 200-day moving average, but look how it's scraping along here. Got to watch this, because if this is setting up a consolidation that's going to break it, I think Goldman could get to 200 pretty quickly. And I mean, that's not a big move. It's 10%, and it's big enough. All right, let's look at the XBD. Yeah, XBD acting okay, though, right? Here's Morgan acting better than Goldman. How about biotechs? We talked about them last week. All right, so the biotechs, as I said, extended, watching for a pullback. Let's go over the stocks we talked about last week. All right, so here's XBI, here's XLV, all right, here's IBB. All look like they are pulling back here. Stock we talked about, this Sangamo Therapeutics, nice pop. Now it's pulling back. See if it coils or continues down to the 20 EMA. Here's gold sitting on the 200-day moving average. Here are the miners. Okay, so the miners are hanging. I talked to Mike Swanson, and he says people don't get interested in the miners until it gets over 24. So we want to watch that. Right now, it's not looking like it wants to do that. I'm going to go over some other stocks also. Here's oil on a nice bounce last week. But remember, the July 4th holiday is usually a seasonal high area. Again, it's just seasonal. You got to look at the price action. First and foremost, seasonals are background. Okay, but you got, let's see. I still think it's going to take out the 2016 lows. Let's see what it does if it gets up to the 50-day moving average. And then finally, bonds. Like I said, I'm going to go through stocks. Bonds also pulling back here. Watch the 250, which are now together as one. See how long they stay there. 200 and the 50. Couple of stocks I've gone over the last few weeks. This Ingersoll Rand still acting okay. Consolidating here. Here's this Every Holdings creeping out. Not in a rush to go anywhere. And then you got BPI, came out of its coil as well, but again, not really going far. Up a little bit here. Percentage-wise, they're okay, but I'm looking more point-wise. Let's see what else we got here. These are the stocks I just talked about, XBI and that. Hold on one second. Here's an older list. Let's go through these a little bit. Yeah, nothing there. But this is Ralph Lauren. We're looking at the short side there. Back to the 50-day moving average after the break from just shy of 65. Let's see if this rolls and keeps going. Yeah, this one was one of the nicest ones. This is the rest of nice gap consolidation, and then it continued up. Nice, about 33% gain on that one. A little bit better. Here's Children's Place. Yeah, popped up. First popped down, then popped up, and just a little bit all over the place. NSIT, yeah, not really anything there. Hasbro, yep. Didn't work so great. Here's UCTT Ultra Clean. This was a gorgeous one. The flag at 14 all the way up to 26, almost a double. Wow, that's a big move there. Here's A10 Networks. Yep, did not work out. Here is Wage. This is WageWorks, which popped up to the high. I remember talking about this when it happened. And then it failed, which is what you always have to watch when the highs are hit. Here's Universal Display. And here's the CSTE with the nice pop-up and going up there till 44. Okay, so that's really it. Those are the couple of lists I had. I just wanted to go over them. No new stocks for this week. It's a short week, and I really want to see if the bulls can step back in here, or if this really is the shot across the bow, if this is the warning, the start of something. But again, I think it will come after a consolidation or a little correction back. No real sell signal here. A break below the May lows that closes below the lows. And of course, if you're trading intraday, you have to be really on top of it for that. But a break below those May lows, that could be the start of something. We have the April highs to watch first, or I'm sorry, the early April highs. I don't want it was higher later on in April, but you got 133.48, and then a break below that, watch that 200-day moving average. Have a great Independence Day if you're celebrating. If not, have a great 1.5 days off this week. Tiny@attackthemarkets.com with any questions. Don't forget to sign up to the website to get free updates. Have a great week. I will talk to you soon.